And so welcome everyone to the Crypto Tax and Regulation, Eliminating Confusion and Where to Begin. And that's actually the perfect title when it comes to crypto tax. So let's get right into it. My name is Kirk Phillips and I'm Managing Director of Global Crypto Advisors. And our wheelhouse is essentially offering virtual accounting departments in the crypto and blockchain space, where we bundle together the services, the processes, and the technology, and handling the accounting and the taxation, which is really something that startups shouldn't be focused on anyway. So we eliminate that headache so startups can focus on their platform. So I'd like everybody else to just go around and just introduce themselves quickly. Dan, would you like to go next?
Sure. My name is Dan Hannum. I'm the Chief Operating Officer at ZenLedger. We're a consumer crypto tax platform that objective is to simplify crypto taxes for the average consumer and tax professional.
Great. And also Josh.
Thanks, Kirk. Yeah, this is Josh Lawler. I'm a partner at the law firm Zuber, Lawler, and Del Duca, where I lead our firm's transactional practice, specifically focusing on new technologies. I am primarily in mergers, acquisitions, finance, and securities work with some IP, and I've been a blockchain evangelist for about 5 years and really specialize in that space.
Awesome. David.
Yeah, thanks, Kirk. Yeah, I'm the co-founder and CEO of CryptoTrader.Tax. So it's tax reporting software for investors and users of cryptocurrency to essentially automate all of their tax reporting.
Excellent, short and sweet. So today we were going to have Henry Arslanian, who is the PwC crypto practice leader, and unfortunately he had an emergency, couldn't make it here today. He really wanted to be here, so I just want to acknowledge Annette Nellen for being able to step in as a substitute on short notice. And of course, she loves to talk about crypto tax brain teasers, and we've happened to have known each other for quite some time now. We've been on the AICPA Virtual Currency Task Force, AICPA, largest trade group for CPAs in the world, where we're liaisons with the IRS and so forth. So we've had an interesting perspective on crypto tax. So thanks for being here, Annette. Would you please introduce yourself?
Thanks, Kirk. I'm Annette Nellen. I'm a CPA and an attorney. I'm a tax professor full-time at San Jose State University and involved with this topic. Actually, before the first IRS guidance came out, became kind of intrigued, occasionally participating in the Bitcoin meetup that was taking place in the Silicon Valley area, meeting all kinds of interesting folks in this space quite some time ago.
Great. So we have a very diverse panel today here, and just so happens that Henry, as I just mentioned, shared with us the PwC Global Crypto Tax Report 2020 that was just issued just a mere couple of months ago. So it's a very, very timely document. We were hoping to get some insight onto the development of that. And that's something I suggest that everybody go reads on this topic, because you can really get a real good idea of what the landscape looks like on a jurisdictional basis, on a, let's say, a per topic basis when it comes to crypto tax, and see what could put your finger on the pulse of the state of crypto tax, I guess, with this report. So with that said, I just want to touch on a couple points with that. Firstly, the thing is that we're still dealing with a lot of confusion, as the title indicates here. It's going to be a number of years before the fog lifts, and it's going to take a long time to sort out so that we have clarity and guidance, and not only in the United States, but in other countries as well. So, that confusion is exacerbated by, the type of business and how complicated the business is, or whether it's a regulated business. And then, of course, whether that business operates in multiple jurisdictions, so multiple countries around the world. So if you have varying regulation and there's uncertainty and you operate in a lot of jurisdictions, it's going to be even more complicated to deal with and sort that out. Also, not all digital assets are the same, as we know. This report talks about payment tokens, utility tokens, and security tokens. We've heard of those three buckets, but perhaps we could argue that there's many, many more than that. And crypto is also, I see it as a shape-shifting type of an asset, and really a brand new asset class, because sometimes it's multiple things at the same time, which may or may not be in conflict with one another, and so forth. So you have that issue. And then you also have the fact that digital assets, crypto assets may be used as an investment, a portfolio play. They could also be used for operating expenses in the context of the payment token. And then also crypto assets don't necessarily fall into existing regulatory definitions. So you have the definitional dilemma, right? Where you may have a specific regulatory definition that talks about a specific type of asset, a specific type of income, how that's taxed. And you say, well, the crypto asset doesn't fit into that definition, therefore we can't we can't apply that principle or that regulation. So you have regulatory definitional challenges. And then where we had, trading, and we we're trying to deal with the tax as far as where in the larger jurisdictions you derive capital gains. Of course, now we have income that's being derived from crypto assets that we didn't have before. So in recent years, we've now have income being derived from crypto assets, staking, lending income, and stuff like that. So, and the question is not, is this transaction a taxable event? Do I pay? Is it taxable or is it not? A lot of times it's more like it's taxable, but what's the classification of that transaction? What's the nature of what's the type of tax, and what's the timing and recognition of that? So for example, it could be capital gains. That's one type of tax. It could be ordinary income. It could be, you could have a portfolio income, and those different classifications may have different tax rates, or they may have different limitations, and so on and so forth. And again, probably the timing and recognition of the income is one of the most critical things, especially in this space. And then of course you have reporting obligations, withholding obligations, nexus, and so forth. So all these different things to navigate here. So that's why this report is rather interesting when you look at that. So what I was curious about is if you guys have had a chance to review that, if there's anything in particular that stuck out to you as an interesting fact, or anything around the guidance in the report that that struck you when you read the report. I'll just comment first is they talk about the PwC Crypto Tax Index and where they looked at probably 20 different jurisdictions, and they looked at where there would be guidance and also 20 different areas relevant to the taxation of crypto assets. Okay. So number one on the list is Liechtenstein. Okay. They got a score of 70%. That's the highest grade on this list of, like I said, approximately 20, 25 countries. And then, it goes down from there. So that really I thought was interesting. And again, it speaks to the very, very degree of guidance. And of course, in a lot of the other things, you'll see where was there guidance or not. You'll see a lot of no's is the majority answer. But also, in some ways, I'm not surprised, because Liechtenstein, about 3 years ago, created a brand new tokenization and blockchain regulatory framework. And they basically started from the ground up and built a whole new regulatory framework just for this space. And I think it's been, that was completed about a year ago. So about 3 years ago, they started that. So I'm kind of not surprised to see them on the list. But David, was there anything that struck you when you read that report?
I think just the big thing is that there's not clear-cut guidance in the majority of the space. And so, as someone who's building software to make this type of reporting easier, we have to always be conscious of that and give the user optionality in terms of how they want to classify things. But yeah, right. So we'll see further clarity come out within the next 5 years, that's for sure. But right now, I think it makes sense to stay on the conservative side. Great
point. Josh.
I'm going to go with David and say there will definitely be further clarity in the future, because you couldn't really get too much less. It's a heck of a lot easier to put out guidance when you're a small, more tax permissive country than when you're a large, very, well, let's just say there's a lot of people trying to do a lot of different things, like the United States is. As I kind of look through this and where there is guidance and where there isn't guidance, it strikes me that the real path is just to look at first principles, and the idea that, there are certain situations that we're familiar with where you're supposed to pay a particular type of tax, and, trying to jam all digital assets into the particular definitions that already exist is really, really hard and possibly a bit of a fool's errand. But trying to categorize the situations themselves and saying what makes sense in the tax kind of context, it kind of does make sense. And if you think about these things for a little bit, you really do come up to a fairly sensible place. But then again, it's just that hard to put the stuff into a codified format when you already have thousands of pages of tax code that you've got to integrate into.
Well, that was an excellent point. Yeah, first principles, and keep it more wide open, I guess, and I'll try to box it in. How about Dan?
Sure. Yeah, I think a bunch of good points have been raised. I think obviously, we can continue to harp on the lack of guidance, but I think on the flip side of the token, the classification itself, leads us into some of this, gray area, with most of crypto being treated as property instead of a currency or commodity or a security. That that one decision has led to some of the lack of guidance and some of the confusion and clarity. So, I think as Josh and David mentioned, I think I'm, pretty confident that we'll see guidance in the next 18 to 36 months. DeFi, a more advanced part of crypto, I guess, has brought up a lot of interesting conversations that will need to be thought through. And, so we look forward to working with the governing bodies and legislations on, hoping to inform them on, what crypto is, how it should be treated, and working with fellow panelists and fellow people in the space to make sure that when that guidance comes out, hopefully it's guidance that's been thought through and doesn't leave another round of gray questions or gray areas based on that guidance, which we've seen from the 2014 guidance to some of the recent guidance that we've seen over the last 9 to 12 months. Sometimes that guidance leads to additional questions and lack of guidance on another topic. So yeah, I definitely think we'll see guidance soon, and I think the classification issue, in addition to the clarity issue, is something that makes this area a little tricky.
Yeah, that's a great point. Yeah, let's hope the guidance comes out, and then it's actually provides clarity instead of producing more questions and more gray areas. That's great.
There's no gray areas in any other areas of tax. We all know.
Annette, do you have any comments?
Well, you mentioned first that, Liechtenstein rated highest so far as having guidance in these 20 areas identified in the PwC report. My first thought was, is that guidance that the practitioners in the community agrees with? That'd be good to know. Or are they pushing for some other argument with something settled in some ways? That'd be interesting to know. And it would be, I guess there's a good caution that maybe among countries, they don't define these terms the same way. So if it's leading eventually to PwC being able to gather that and help us to understand all of that, that's a nice service that they're providing to all of us. And certainly among the countries, there's also going to be a variation on, are these definitions going to be used for more than one set of US code? Is this going to be for securities code, commodities code, tax law? That's a longstanding question we've had here in the US, because we know they've already a ruling from that the virtual currency can be a commodity. We can't get that answer from the IRS if it'll be the same for tax purposes. And that's, again, a longstanding issue. I think this data can also be helpful if it drills down to, for example, if we saw that, hey, these 20 countries that they looked at, do 18 of them have some kind of a de minimis rule? That might be added incentive to perhaps convince the IRS, or maybe it takes Congress to actually put a de minimis rule in, such as similar to what we have for foreign currency under Section 988E. So I think there's multiple purposes of this. And I hope they or others will continue to delve into this, because it's a pretty big project to dig into even just finding this in all these countries.
Yeah, I would gather that there was, I'm not sure here what the number is, but I just surmise that there was probably 100 people involved in putting this report together, because there was 30 different jurisdictions, multiple people in each one. But great point there. And also, the study, when it was measuring those scores, it did not measure the quality of the guidance. It was simply measuring, like, is there anything there at all? So if you put a quality factor in there, the scores would probably go down. So
maybe a good job for some academics take that on.
So on that point, Annette, I'd like to ask you about the infamous virtual currency question on the 1040 form that we know came out for the first time in 2019 on Schedule 1, and of course now moving to the front page of 1040, page 1. And it's just interesting how what seemingly one little, simple question, and really how simple, how complicated it can be when you really wrap your head around, do I answer that question? No. Can you speak to the challenges
there are multiple challenges, and actually the AICPA letter, we did raise those, and others have raised them as well. And if you're not looking at draft tax forms for 2020, you might not know that question that had first appeared on the Schedule 1 1040 now is right underneath where you put your name and address on the 1040. So really everybody is, I guess, thought you did at least see that question. It's a very broad question because you could have a yes answer, but there's no tax consequences of that. And some of the things that the AICPA had asked IRS, could you clarify this? One, what exactly do you mean by virtual currency? The notice 2014-21, where IRS first said basically you treat it as property, and they provided some questions to 16 specific questions. They actually used the word convertible virtual currency. Doesn't matter that the question doesn't say convertible virtual currency, it just says virtual currency. So it'd be good to know on that. It does ask if you have any kind of a financial interest, whether you own it, use it. It's a long list of verbs there. And if you have, let's say someone gave you virtual currency as a gift and you just held on to it, or you got it as wages and you just held on to it, you would check yes, but is the IRS now going to look over at your Schedule D or the capital gains form to see if something's on there? It seems like they are. I've been at conferences where someone is speaking from the IRS on the topic, and I've asked the question, and generally they're saying, no, you don't really need to attach anything. I think a lot of practitioners would say you're probably better off attaching something, perhaps saying I received it as a gift. We've also asked the question, a lot of people just hang on to their Bitcoin. I've been holding on to some for I don't know, 5 years, so it just sits there a small amount in a wallet. There could have been hard forks on that or airdrops or something. I'm not paying attention to it, but according to the Rev Ruling 2019-24, if it's recorded on a distributive ledger someplace, I've received it. So should I check yes and wait for the IRS to send me some kind of a notice? Right. I think they really now have an increased responsibility to provide more of these answers. Also, if you're a partner in a partnership, there's no reporting required on the partnership form to say we own virtual currency. A partner might not know that, but they clearly have a financial interest in it if the partnership owns it.
Yeah, I mean, we could have a whole session just on this question.
I'm going to have to run back to my law firm partners and let them all know that the firm does in fact have some tokens, because I'm sure a bunch of them have no idea whatsoever. That's a great point. You know, just to jump in, and I mentioned first principles before. I think, you know, a few things, and I think Dan mentioned this also. You know, number one is people have to understand that, you know, when you say digital asset, it's kind of akin to saying asset on paper. You know, the digital part is just the media that it's recorded on. That's all it means. And whether it's a stock, a bond, a financial product, the equivalent of a barrel of oil, or anything else, piece of art, is, you know, the fact that it's digital isn't really relevant to that, but people kind of have to get that down. And then the other piece of it is there needs to be some common sense application. You know, I for one can tell you I've used, you know, automated trading applications that'll, you know, have, you know, 3 different arbitrages set at once and can generate, you know, easily 100 trades in a given day that, you know, are, you know, pennies potentially between them. And I know that the account that I put that in, I put a certain amount of money into to begin with, and I may or may not withdraw any ever. And it seems like that would be the tax points, but the way the tax code is written, it looks like every single little one of those trades needs to be reported, which, you know, is just not practical by any stretch. I don't think anybody can easily do it, although Dave and Dan have software that might make it very possible, but it still would be a ream of paper to do it.
That's actually right. Yeah, you could end up with pages and pages and pages of potential trades. That really makes it look like what happened is there's a disconnect between that and the economic substance of all those transactions. So, let's see. So, Josh, you know, while you're on that topic, what kind of challenges do you see with working with your clients? What type of, you know, crypto tax related challenges?
There's a nice little confluence between the lack of guidance and the lack of technology know-how. And, you know, a really good example of that is just the idea of, you know, dividends or distributions on digital assets. And, you know, 3 years ago, that was a game ender because we didn't know how to do it from a technology perspective. Now, at this point, we do know how to do it from a technology perspective. It's not really even all that hard. However, the question of who has what kind of reporting obligation to who becomes a really, really interesting one. And particularly if you've got a typical digital asset that fractionalizes out to 18 decimal places, you know, again, you've got a logistics issue. You know, I don't know how many things are going to go to 18 decimal places, but let's just say everybody had one tiny little piece of a particular token. You know, are you going to send out quadrillions of different reporting returns. I don't know that I see that as so but according to the tax code, that may very well be what they're looking for.
Yes, interesting. So, so the going back to the title for a second, so eliminating confusion and where to begin. So I just want to touch on with just a few minutes left here, where to begin as far as when you're navigating, navigating these stormy crypto seas, as we said, where you have a lack of guidance and lack of clarity and so forth. Like, how do you approach coming up with an answer and a solution when you don't have that? So what would you say? Let's just go back to David and Dan. David, do you want to go first?
Sure.
How do you help?
We've been harping on the lack of guidance, but in reality, for the average person who's investing in cryptocurrencies or using them, it's pretty clear cut how you have to report them, right? If I'm buying Bitcoin and I sell it for a gain, that's a capital gain that I need to report on 8949. It's not that difficult, and it's not that big of a gray area. We're getting into very extreme use cases, and then it does get gray. But for the average person, it's not that difficult. Now, where it does get difficult is if you have quite a number of different accounts, wallets, platforms that you're in and out of using different digital assets on, right? If I'm investing in Coinbase, but also playing around in DeFi and I have my own cold wallet, well, now you get a data problem, right? And that's what software tools, try to solve for, is this cost basis tracking. So just in terms of how do we eliminate the confusion, number one, my team invests heavily in content. We want to help educate the market in terms of, what do you need to be doing to stay compliant? And then just building great software tools, right? The market is going to respond to this problem and make it easier every single day. And we're seeing that play out.
Yeah, so that's good. I've heard you talk about that before. You're wrapping content around the bells and whistles and the tools, the widgets.
Right, absolutely.
Track the transactions and produce reports and stuff like that.
Yeah.
Dan, can you speak to that as well?
Yeah. Obviously, content's a big one. Educating consumers is massive, but also, as we talked about, educating regulators, educating tax professionals is, another big piece of making sure everyone understands this. As David mentioned, one of the tools that a ZenLedger or CryptoTrader.Tax provides is software that automates and simplifies the process of trying to, handle your reporting. As you mentioned, going back to the title of the topic, I think one of the biggest things that we suggest to someone who's, either investing or looking to invest is you don't have to keep track of every single transaction, but keeping track of the sources of your transactions is huge. So, understanding that you used Binance or KuCoin or Gemini or Poloniex, and then you used a Ledger, a Jax, a KeepKey, et cetera. Just having that kind of basic understanding of what wallets have I used, what exchanges have I used, is massive, because that's, one of the issues or problems that we solve is pulling all of what happened between that, whether it's a non-taxable self-transfer or a taxable sale of an asset, or et cetera. The software allows us to track that, but if you can't account for the sources, that's where it gets a little tricky. But yeah, we definitely are trying to do our job of educating consumers, tax professionals, and then using, the benefits of software to, strip away some of that confusion, strip away some of that element. And then also, for us, investing heavily into customer service. You mix taxes in general and then crypto, and it's a little bit of a nightmare to wrap your head around. So we try to not only provide that content information on the front side, but then also on the back end, making sure that our customers can have 24/7 access to real live human beings on the back end that can either walk them through just how to use the software or other elements as well. So we definitely try to make sure that we're educating, and then also providing that support and software on the back end to enable the consumers to easily comply.
Yeah, that's an interesting point. How you're talking about like taking a step back and looking at it from like a 50,000 foot view and just say like, what was the transactional flow? Like just like almost like in a diagram type of way. How did you use the wallets? What was the flow of the transactions, instead of thinking, oh, I got to capture every single transaction, because as we know now, for a business, you maybe need to capture more of those components, but for an individual, as we know, transfers, you don't necessarily need to do that. But so that leads to, of course, you also have so like, understanding the flow of transactions may help you in gathering everything together and figuring out how to troubleshoot and stuff like that. But just to, again, go back to, how do we deal with coming up with, answers when we don't have these, so we got, there's challenges like having missing information and stuff like that. So just, Annette, I want to go back to you again. Like, how does somebody go about, especially from a tax professional's point of view, go about providing guidance when you don't have a clear-cut answer, or like I was saying, missing transactions, you got holes in the information. How do you go about, let's say forensically solving something or delivering a solution to a client?
Well, obviously very carefully, but that notice 2014-21, it had 16 questions in it with answers, but it was another important statement in there that the IRS said, we consider it property as opposed to it being a foreign currency. So basically they're really saying, hey, there's a whole bunch of guidance out there because we got all kinds of guidance and there's court cases on property transactions. So trying to fit that in. And when they issued the Rev ruling 2019-24 and supposedly on how a hard fork is treated, and many people have called for them to improve that and clarify the fact pattern and the application of that. You could still piece together and think, well, okay, a revenue ruling is binding on the IRS, not necessarily binding on me. May I still go back to property transactions? They also issued a lot of FAQs. Some of those FAQs are really interpretive, but they're not binding on the IRS or on a taxpayer. So we've got an issue of what does guidance say? And then quote, what exactly is that? Is it truly guidance? So we have those challenges there, but for the most part, you want to look at binding guidance and try and solve these and document why you're doing what you're doing.
Yeah, well, I always like to remind people too. It's like, you need to go take the approach of like, that's about acting in good faith. The professionals got to act in good faith. Taxpayers got to act in good faith. If you did the best possible job you could do at some point in time, you can't really do any better than that. So, just act in good faith, do your best job at documentation, and, have a reason, if you have a reasonable, position and approach, especially if you're going back further in time, more likely to have, be able to support that, position that you took. And I remember, I think we're just about out of time here, but I remember one attorney that I admire. It was a colleague of mine, and he said to me one time, he said, you just got to apply the New York Times test. I said, well, what's that? He said, well, any action that you take, if you're willing to have it come out on the front page of the New York Times and your gut tells you you're good with it, like that's your litmus test for knowing, which action to take. And I was like, oh, okay, that's interesting. So I just always remember that, the New York Times test. So I think we are out of time. I guess in the meantime, how can everybody reach you guys? Would you just like to say, to tell the audience where people can reach you if they'd like to contact you?
Sure. Yeah, you can reach us just online at CryptoTrader.Tax, and you can get a hold of me or my team pretty easily right on there.
Great. Dan?
Yeah, same thing. Just ZenLedger.io is our website, and then I'm pretty active on Twitter as well. So if you have any comments, questions, anything like that, my team's happy to help.
Annette?
You just doing a Google search, Annette Nellen, virtual currency. I've been maintaining a website with just a lot of background information so people can maybe find some of these resources. Hopefully that'll be of use.
Yeah, Annette's got a lot of stuff out there. Josh?
Email is probably best. It's J, the letter J, Lawler, Lawler, at zuberlawler.com, ZUBER, LAWLER.com, or ask my assistant or my wife, because they pretty much run my life.
Great. Thanks, everybody, for participating today.
All right, thanks.